Hello everyone and welcome to Day Trader S&P 500. It's early morning hours, like almost 2 a.m. on Friday, the 29th of September. Wanted to get our YouTube subscribers caught up with what our newsletter subscribers, the Woodson Wave Report, have. Wanted to let you guys know I'm bringing back the 25% discount. So if you go to here to order here and register on our web page, fill all this stuff out. Excuse me. Pick any one of these subscriptions. By far the most popular is the monthly. Put in a discount code of 25 and hit apply. And we give it a second here. You can see it takes 25% off. Okay, we're running that through the weekend. I think it'll end on I believe it's Tuesday. So if you guys want to take advantage of that discount code, you might want to do that right away. That takes that's for the first month only. After the first month, then it reverts back to the 144. Same with all the other memberships. Okay, let's get on with we haven't looked at the long-term count for YouTube in a long time. This is a S&P monthly bar. Okay, you can see the all-time high back here. Okay, I'm kind of going to work backwards here, but you can see we've got the A wave down, and then an ABC up for the B wave down. So this should be an ABC. I don't know if that's going to be the end of it or the beginning of it. We'll see. But if we get a Fibonacci extension on there, and this won't be to the penny, but it'll be pretty darn close. You can see we get that up there at that 46. That's close enough. 09. You can see the C equals A here at 3286, and the 1618 is down here at 2468. And these red lines are the retracement targets from that 2020 low. Okay, and that obviously was a 4. We identified that triangle, expanding triangle, early in the pattern. I think we were the first ones in the world to do that, as far as I know. I think other people caught on. But anyway, that's what we're looking at. You can see in the blue here, the alternate count labels that as a 3. And this is a big stuff, so I'll scrunch this down. You guys can see the longer term chart. I've done this, worked on this for years, maybe decades. But there's that fourth wave triangle. There's 3. Let me bring this in a little bit more and scrunch it down. All right, there's that that wave. I originally thought this was 2 different declines, but now from 2000 to 2009, it looks like 1 decline. Okay, and that's wave 3 and wave 4 in the red count, alternate wave 1 and wave 2. You can see the 1, 2, 3, 4, 5 up here with the circles around it, going up to the all-time high. But sorry, I'm having a little trouble with the voice here lately. But we'll go all the way back this monthly bar so you guys can see what's going on. And I counted this from 1982, and all these years later, there's still, you can make a case where the bull market beginning in 1982 or 1974, but for all the numbers, it works out much better from 74. So that's 13 years up. 87 was a high and a low, as you can see, crash of 87. I remember it well. Then we have a Fibonacci 13 years up for wave 3, and then we have a Fibonacci 8 plus 1 years for the wave 4, and then we have Fibonacci 13 years to wave 5. There is a chance that that's just a 3 in the alternate count, but that's what we're looking at. 5 waves up from 1974 to 2022. Okay, and then those outrageous corrections are here. I don't even want to mention the numbers if you can't see them, but again, it's very early in this bear market. It's not even excuse me, 2 years old yet, but we'll see how it plays out. Just so I can give you guys a little look at the very long term for our YouTube subscribers. I want to look at the US 10-year interest rates, because what it just did the other day, I believe that was Thursday. Well, it's yesterday now, but it's still early morning Friday. Okay, so it hit right on our 1-to-1. Okay, we're looking at the blue wave 1 up. Let me get back down here to show you guys the whole thing here. Okay, scrunch it down. There we go. Alright, in the blue we've got 1, 2, 3, 4, 5 for the one with a circle. That's 1 of 5 of a larger degree of trend. We've got wave 2 down here, and wave 3 equaled 1 right there. So the red lines are the retracements for wave 4. As we know, wave 4 should not go below the wave 1 high of 4.362%. So the 382 is at 4.451%, and the 50% is 3.76%. We could ignore the 618 and the 786. Unless we're wrong, those should not be hit. So that's what we're looking at there. There's a nice move here from 4.060 right up to 4.69 or 4.70, which happened yesterday. So look for a near-term pullback. Then we'll get, that would be a 4, and then we'll get a 5, and that'll get up there probably around 7%. We did those calculations before. We'll do them again. Okay, I want to look at the S&P cash here. No, that's not it. There it is. My apologies. Oh, that's so. We're going to go right into the ES. Sorry, my apologies here. Okay, here's the ES from the July 27th wave B high. You can see a wave 1 down with the circle around it on 8/18. That's the 1.00 from, as far as time goes, from July 27. And then we go up in wave 2. It goes to September 1. That's the 1.618. You can see those Fibonacci multiples down there. All right, and then 9/26, September 26 was a 2.618, and this went 1 day later, missed by a day. You can see we have a target there and an actual, but the let me get this out of the way there. Let me just make this bigger, easier for all you guys. There we go. We can get that trigger right there. Okay, so that down here on September 26, 1 day after the turn date, I think that's 27, and the turn date was 26. The 2.618 multiple. That is wave 1 of the larger wave 3 with a circle. Here's our wave 2 targets up here. They're not right lined up, but that makes them a little better. Okay, once those targets are achieved, these targets are for wave 3 with a circle around it. And 4310 was where it equals 1 to 1. You can see the 4232 is the 1.272. The 4191 is 1.414, and the 4132 is the 1.618. We can get a better lower degree wave count once this wave 2 up is complete. Then we'll be able to get 3, 4, 5 to make the larger wave 3. So that's what's going on there in the S&P futures. We can drill down a little bit on that. Yeah, I wanted to show that 43.99, which is back here. Okay, that last 5th wave. So we put out a couple reports on that. Okay, we have a lot of triggers and a lot of targets. Our subscribers to our newsletter love that. I put this 5th wave in red and in italics to show the difference because it's not the same degree of trend as the black. But anyway, that stands it out. Here we got a 1 down and 2 up. A move below this 43.38 trigger brought this target into play, 43.10. And that wave 3 hit at 43.0550, a direct hit. Then we had our calculation for the fourth wave up. That came within a point, or a point and a quarter. And then we had wave 5 down here. Again, that was within 2 points, or 1.25 for wave 5 down. From there, we've got an A up, a B down, and a C up. Although this can be counted several different ways. Okay, since this is a 2, this might be, let me just put this in here for you guys, okay? Let's get an ABC pattern here. I'll show you guys. This happens quite often. Okay, we can say that ABC is complete. You'll C equals A. You can see right there the B wave pullback. But you got to look at the bigger degree of trend. That's right around 43.54 to be exact, 43.55.75. But if we look back here, our 382 is up almost at 4,400, 43.99. So to go back here, let me show you guys, because this is developing. We can show an ABC pattern, and I'll clean it up first, okay? And we'll get a B down here, we'll get a C up there, and we'll change that degree of trend to one larger, and just so we can see it a little bit better, we'll make it a different color so we can see that it's a different degree. So what I was getting at is this ABC could be A, the larger degree A, then we get a B down, then we get a C up, which will get us closer to our Fibonacci targets for wave 2 over here. Okay, so that's playing out like a wave 2, and we'll see how it plays out. This could be a 1, 2, 3, 4. There's a little bit of overlap there, but boy, this is taking on a triangle pattern, if you will. I'll show you guys here. Alright, and we can have overlap in a beginning and ending diagonal triangle for wave 4. That's the only time we can. You can see we've got a nice little triangle development over there. So it sure looks like a 4. So we could label this. Again, it's still in process, but it could be. I just want to show you guys the different things, and we do this while we're trading. Alright, we could have this here, if you can follow. It's in blue, a 1 up. Let me get it here where we can see it. There we go. A 1 up, a 2 down, a 3 up, a 4 down, and a 5. Okay, does that mean it's a new bull market? No, that would be, okay, I'll show you guys this again. I hope I'm not losing people here, but I'll put it, this is larger. So if that is 1, 2, 3, 4, 5, okay, then we'll put an A up here. Okay, well, we shouldn't have a cap. There we go, degree of trend. So that would be A, and then we would get, I'll just do a line here, we would get a B down, and then we would get, let me get that on here, a C up. Okay, so that's, I showed you guys all the different ways to count this. They're all in play. Okay, even that 4, because that could be a leading diagonal with it. It's a point or two overlap from 1. So there's a lot of different ways to count that, a lot of different ways to trade that. But we'll see, this is an upward correction, and here is that upward correction. You can see it's just beginning, and it's got these targets here. Okay, by the way, our next date on the Fibonacci time zone is October 18th. Okay, so we might expect the next low to happen there, or if this gets complicated, this move up. And it sure looks like a 2 and not a 4. Okay, so that's why we say this is 1 of 3. That would be 2, and then we get 3, 4, 5 down there. Okay, so we'll see how all of this plays out. I want to show you guys, you know, when you're trading, you can look at that and make your stops and your targets accordingly. Because whether this is a 1 or an A or a 2 or a B, this was the target where it equals right here. All right, either C equals A or 3 equals 1. And there's higher targets, but obviously it pulled back from there. So when you're trading, you don't care if it's an A or a 1 or a 2 or a B or a C or a 3. Down here, you just know that it's going to go up to here. And it does. Take profits and then refigure. If we're going to get a 4 then a 5, then you'll get short in here and put your stop below 4 because it shouldn't go below there if it's a 5. If not, it'll collapse and reverse. So we'll see. Sorry I'm a little long-winded here, especially when I don't have a lot of voice. Oh, I want to show you guys our reports here. Okay, so let's get the early morning report. Again, we're up at the wee hours, 1 a.m. That was yesterday. I guess we're doing the same thing. Show you guys what we had here. Here's where we had that labeled as a 3, and then we saw this move up. Told our customers that's not a 3 because the move up looks like a 2, not a 4. So that was 1 of 3. Okay, you can see there, and then we had our triggers and our targets and all that there. Okay, and that's when we saw this move down at the 43.05 low. Might not be complete, might be 3/5 complete. So we're looking for a 3, then a 4, then a 5, and that's how we got our targets there. Okay, remain in sell rally mode. Now's a good time. The last since July have been a really good time for sell rally mode. I want to show you guys one more thing we put together after the close earlier this afternoon, or I guess it's yesterday now. Anyway, what we put here is, yeah, by the way, I'll be out Wednesday to Tuesday, basically a week next week, so won't be any. If I can make reports, I will, and if I can make videos, I will, but my time will be very limited. Okay, but anyway, here's the chart we just showed you guys. You know, 1 down, 2 up, 1 of 3, and then that's 2 of 3, and here's the other targets here. We went through that. Okay. Excuse me. And here's our wave 2 upside targets. They're up there on the chart right there. Okay. 44.75, 37.25, and 99.50. All right. By the way, I want to mention, in previous bear markets like 2000 to 2002 and 2007 to 2009, I saw minuscule retracements that didn't even make it to the 382. So be aware of that. We'll see. I mean, there's no reason why it can't go up to the 618, and if it does, it'll fall just below the wave. Well, it could go all the way up to the 786. I'll add that if it looks like it's getting up there. We'll look at that form in that pattern. But be prepared for anything. Like I've told our newsletter subscribers for years, in a bear market, when it is a bear market, surprises will be to the downside, not to the upside. Okay, so don't want to get whipsawed and all that stuff. Here's our trigger and targets here. Now it becomes the 42.77 low. Any move below there, bring these targets into play, which are there again. Okay, so that's what we're looking for. And up here in wave 2, then this is a third of third wave. This should be pretty sharp and pretty swift. So we'll let it play out. Okay, guys, sorry for the long-windedness and the lack of voice, but I'll leave you guys with that chart there, which is the same as that. And until next time, take care, everyone.